Sorry, from a startup, it took 10 years to get to a $75 billion valuation.
It's the number one banking app in many, many countries.
You know, you've really arrived in a country when it becomes a verb, they revolute.
Let's try and do some advice for graduates then, because there's a lot of them, more than there are jobs. I don't think I've ever heard anybody say that.
We have over 70 million customers, growing at roughly about 1 million every 16, 17 days.
What was it about Revolut that made you catapult bigger than everybody else?
We watched a lot of people screw it up as well.
The risk is just too high. How does somebody half the size buy somebody twice as big?
The true test of a CEO is...
Today's guest is arguably Scotland's greatest ever businessman. Earlier on in his career, the Harvard Review said that he was one of the top 18 CEOs in the world. Why? Well, he started by buying a small fund management business in Aberdeen in North Scotland for £60,000. 35 years later, it was worth over $4 billion. He's been a director of all sorts of things. Sky, he's the chairman of Glencore, one of the biggest mining companies in the world. He runs a private equity. It goes on and on. But today, we're going to concentrate on a job that he's been doing for the last 6 or 7 years. He is the chair of the fastest growing banking app in the world outside of China. Even I'm a customer and I've got my card in my pocket. It's a great pleasure to welcome a man that I've known for many years, the chair of Revolut, Martin Gilbert.
Oh, great to be here. I hope you've got the right card, and pay enough for it, not go for the free one.
I've got a proper metal one.
There's a one above that called the Ultra. You need the Ultra.
He needs to pay the full subscription. That's typically
typical.
Martin, let's start by just give us a sense of the scale of Revolut, because it is almost hard to visualize.
After I retired from Aberdeen, I was, I suppose, looking for something to do. And I met Nikolai. And at that stage, this was maybe 7 years ago, and the company's only been going 10 years ago. It would have had maybe 4 or 5 million customers. And today we have over 70 million customers, and growing at roughly about 1 million every 16, 17 days. So every day I look at the number of signups. We get a message on the number of signups, and it's astonishing. Every day, 60, 70,000. And also, interestingly, one of our new bets called Revolut Business signs up a lot of customers each day, because it's almost more important in a way, because if you try and start a business, it's really, really hard to get a bank account. You need a bank account to get started. So we're really growing that business hugely.
So just in terms of a few stats, the last accounts were 2024. So these are already out of date, right?
Yeah.
But it made a profit of $1.4 billion. It's the number one banking app in many, many countries around Europe, and obviously globally. It's expanding in many different global markets. So the scale of the business is extraordinary. But what is even more extraordinary is the speed with which it's growing. When things get big, normally it's harder to grow. But it seems like Revolut, with the momentum it's got, just keeps on growing. I mean, what's behind that, Martin? And did you sort of spot that 6 or 7 years ago when it was a much smaller business? I mean, did you ever believe that it would be where it is today?
No, I didn't. I mean, to be fair to Nick Storonsky, the founder, I mean, he definitely did believe that, and he thinks we'll get to 100 million customers and so on, which I'm sure we will, actually. But so what's the secret? I think let's start with what you really need above all else when you're in business is the right product. It is a very, very good product that is easy to use. So that makes it easy or easier to sell.
But to be fair, Martin, there were other digital banking apps. What was it about Revolut that made you catapult bigger than everybody else?
I think the thing that has probably helped it the most is going global. Whereas all the other banking apps tend to be local. So there are very good competitors, but they tend to be local. So you take Monzo, Starling, they're mainly UK. I mean, they do have a bit of international, but we're the only one that's really gone global.
Well, let's just explore that for a second. I mean, we interviewed another famous Scottish business, Skyscanner, that went global. And for them, it was really about translating a website from English into Spanish or whatever.
Yeah.
Yours is a bit more complicated than that. So when you're going around the world because of banking regulations, is it the same problem everywhere, or are they very different?
No, I think it's going to be more difficult. It is more difficult to scale Revolut than Skyscanner. By the way, they sold too early, by the way. So
it was $1.75 billion, so they did okay.
No, it could have been. It's probably worth 17 and a half today. So, but that's another problem we see in business is you do tend to take the money. And what Nikolai does actually is he's keen to keep going and grow the business. But obviously, Revolut is more highly regulated than Skyscanner is. So, I mean, we're regulated globally. So that's one of the challenges of growing a bank globally.
So if we just look at the product, again, you sort of 6 or 7 years ago, it had this proposition in the marketplace. I mean, what is it for people who don't have a Revolut account, which I should, because I need to keep up with Ian Fishwick here. What is it that sort of differentiates itself from, as Ian said, there are lots of other startup banks that have done been moderately successful. What's the sort of differentiator?
I think there's some very good competitors locally. So, Starling and Monzo are good. I mean, Monzo especially is a pretty good competitor to us in the UK. But I think that the difference we have is being global. So it's much easier. So take Ireland as an example. We have an 80% market share in Ireland. 80. Now,
of the banking market?
Of the adult population. So
that's incredible.
Why should we have that? Because it's so easy to, if you're in Ireland and you have relatives here in the UK, which they all do, by the way, and it's a euro-pound corridor. So it makes it natural. We should be probably the app of choice there. So it's that more than anything else. It's that global footprint we have.
So what does a good country look like? I mean, I can kind of understand Ireland because you've got the euro to GB pounds transfer all the time, and you've got what feels like a slightly antiquated banking system.
Yeah, that more than anything else is the antiquated banking system, because you couldn't actually transfer money between banks. So the youngsters, and remember, it's a highly educated young population who love technology. So Ireland's the one market it's become a verb. So, you've really arrived in a country when it becomes a verb. So when they go out at night, say 8 of them or 6 of them go out, they Revolut. So that automatically splits the bill.
So it's a bit like Google.
Yeah, it is. It's Hoover, whatever it might be. So not that I Hoover very much, but it's amazing. So there was that ability to transfer money between the youngsters that really got us started, which you couldn't do with the banks. So, but what we've forced the banks to do, of course, is catch up and modernize themselves. So now you can transfer money between banks in Ireland, but by the time it happens, normally it's too late. We've really sort of taken a large percentage of the banking.
And I think with scale-ups, I suppose you've been there for 6 or 7 years. You get these plateaus where you raise money, then you raise money again. Were there points at which you sort of saw the potential to double the size of the business if only you raised more money? I mean, was it essentially about capital? Because clearly Revolut has been probably more successful than most of the financial services businesses in the world in raising new money.
Mm-hmm. Yeah. Well, we haven't needed to raise new money for about 2 or 3 years. Right. So the most recent trades that happened were all secondary. So that was the $75 billion valuation. About $4 billion crossed.
Sorry, from a startup, it took 10 years to get to a $75 billion valuation.
Valuation, yeah. And
the business is worth more now. I mean, presumably, if you do another share trade,
Yeah. Oh, the next one will be, whatever it's going to be
100?
closer to. It's going to be close. Certainly, if it's not 100, it'll be close to 100. So, yeah, I mean, just the growth, the momentum you get. Because I always look at the last month or the last few months to see what the growth and profitability is. So looking at a historical PE or even the budget for this year we're in is sort of almost historic to a large extent. The speed of growth is amazing.
And when you're growing that quick, I mean, how many people are you hiring a year? I mean, how many have you got now?
Well, we're trying to keep the numbers as flat as possible. We're about 10,000, but we've doubled the size of the business without doubling the number of agents, so to speak, who are dealing with the customers. And the reason we can do that is to use the dreaded AI. I mean, I don't like to use the word AI because I think it's actually Google was really an AI function to a certain extent. So, I mean, I think we've enhanced these sort of products. But for us, it's really given us huge efficiency gains and better quality as well. So if something goes wrong, you message, and it will be AI generated, the reply, until it gets really complicated, and then it goes up to an
And
agent.
you've got, I mean, the quality of the people, presumably with the brand, with the success of the business, must be incredibly high.
Yeah, we'd 1.5 million applications last year for jobs.
For how many jobs?
Yeah, very few. I
1,000?
mean, maybe 1,000 or maybe 2,000,
Wow.
something like that.
I don't think I've ever heard anybody say that. 1.5 million applications
no,
for
it's
1,000
amazing.
jobs.
And this is the first year we're taking on interns and graduates. So all of that's good. So it's he wants to bring it. He's very keen on young talent, but they have to.
But what sort of people
STEM.
fit the
It's
bill?
all STEM. It's all
right.
STEM degrees. I mean, it's a theology degree from somewhere is not going to cut the mustard. Usually, I mean, it might, but nothing
is it
against
personality?
theology.
Is it-
nothing against theology degrees, by
or
the way.
history in my case, right? But is it personality? Is it just sheer or geekiness, or what is it?
No, it's not geekiness. It's a mixture of all of those. But he has a theory that people with top degrees from top universities have a work ethic to get there. That's basically what his sort of thinking is, and they're well organized, those sort of things. So, and he's right to a certain extent. The people we do recruit are highly motivated and very talented.
How many countries a year are you opening? And how do you keep consistent culture and things? How are you doing it?
It's difficult to open that many countries a year, maybe 2 or 3 a year. And it's a long-term plan, because from the time you make the decision to enter a country, it can be 2, 3, 4 years till you're mobilized in that country. By the time you get the license, then mobilize it and get started. So, but we have what we call our expansion markets that we're looking at globally, where the plans are to open over the next 10 years.
So how do you decide which country to do next?
We look at a number of criteria. We do obviously a very deep desktop study in which countries would be good for us. So, I mean, let me give you an example of a country that would be really good, would be the Philippines. Why the Philippines? Again, there's quite, at the moment, it costs an average Filipino to send money back to the Philippines. And bear in mind, they're number 2 in the world, and I can never get a remitter or remittee, but I'll keep it simple. By the person in the Philippines getting the money, it's costing them about 4% roughly. So
which is huge commission.
Huge commission. I mean, don't get me wrong, that's gone down quite a bit, from the old Western Union, sort of 20, whatever it might be. Nothing against Western Union either. They've done a great job. But so we're prepared to do it for 10% of that or something like that. So the government there would obviously be attracted to that, unless there's a very strong incumbent banking system, of course. And bear in mind, some countries have very strong banking systems. And by that, I mean very strong politically, have a lot of political leverage to stop the likes of a Revolut coming in. So, the amount of money being transferred from, so if you take where the money comes from, America, number one, Middle East, number two. And then in terms of countries it's going into, India, number one, Philippines, number two, Bangladesh, number three. So you look for those corridors. We've got a banking license in Mexico. So obviously that US-Mexico would be important to us. So US would be a very important target for us going forward.
And we've got a lot of people who watch the show in India and Pakistan. I mean, I know those are markets that are on the radar. What's the update?
I think we've got, we have a lot of people in India. So I can't remember the exact number, but somewhere between 3,000 and 5,000 of our support staff would be in India. A lot of the engineers would be in Dubai. These sort of places. So the engineers love going somewhere low tax, nice and sunny, nice quality of life. So some in Spain as well.
I know you're famous in places like Ireland and over here in the UK. When you land in a new country, you're obviously nothing like as famous. So what do you do marketing-wise?
We open it up for people to register when we do open. But we've got stuff like now Formula One, where we're the lead sponsor in the Audi team. So it's Audi Revolut. So that's going to be big for us for name awareness globally. So I think we're probably the biggest spender in marketing in Europe and financial services. So we do spend a lot. So I go back to one of your original questions, why success? Because the product is so good, and then we market it. And we're very, very data-driven when it comes to marketing. So we know our average amount of payback period is something just below 12 months. And it's less for referrals. We've got a very big referral program in that if you refer someone, you get paid £100 or whatever it might be. So that the payback there is about 7-8 months. And then obviously what we call, organic marketing is slightly over the year.
See, there's a big lesson for the audience there. I mean, that idea of how long does a customer take to pay back from the marketing spend? Some people just get carried away and they realize that, hang on a minute, it's going to take 5, 6, 7 years to get the money back. The risk is just too high when you do that.
You've got, and insurance companies were a very good example of the cost to pay back, and they disguised it with using different forms of accounting. So it is a valuable lesson. It's one of the things I've really learned from Revolut is just the sheer discipline on data is unbelievable.
And I suppose what's the future for the business? I mean, it just keeps growing. It's a phenomenon globally, but
keeps growing,
adjacent products or adjacent markets?
Yeah, I mean, his strategy is you can do everything on one app. So there are certain products will come in like credit cards because it's a debit card at the moment, probably mortgages, wealth management. All of these will come in the future.
Which is extraordinary, isn't it? Because, of course, you've done all of this. You made this incredible profit. You're not actually providing credit at the moment.
No.
That's what's staggering, really.
Yeah, well, our balance sheet, I mean, we're probably, again, the best capitalized bank in Europe in that we're at about 41%. So our balance sheet's very simple.
So what is 41% of what?
40% tier one capital, which is most are at 10 or something like that, 10 to 12.
You're sitting on a lot of cash, basically,
sitting on a
Martin.
lot of free balances from customers. So our average customer has maybe, say, 500 euros, shall we say, on. So we've probably got 30 to 35 billion of free cash, and then we are very conservative on the balance sheet side. I think we're lent about 5% on the asset side, whereas most banks, as you know, are 10 to 12 times geared. So we're the most, again, very, very ungeared. Nubank, who are this sort of other poster child, shall we say, of digital banking, they're a completely different model. Theirs is built much more on credit, and they're very, very focused on Brazil. So they're bigger than us, and they're the sort of number one sort of digital
If I look
bank.
at my card, I was looking last night. There's quite a few facilities on there I haven't used yet.
Yeah.
One of them, for example, is the ability just to buy crypto.
Yeah.
Do you see people buying crypto a lot through a card like this?
Yeah. We see them doing everything. We see them buying shares, buying ETFs, buying crypto. As I say, the whole idea is you can do everything on the one card. You don't have to shift between one app to another app, to a third app or whatever. That's his whole, that's Nikolai's whole theory.
So the fact that I have a separate account for buying shares, you think that's an old way of doing it? Eventually,
well,
if it all goes through one card.
Well, if you do it, you should try it on your Revolut card because it's zero commission, and everything is then integrated into one, and you're not transferring money between one account and another, where there's so much chances of fraud more than anything else. So that's the theory.
And what's the future for the business, Martin, sort of corporately? I mean, could there be a float or, I mean, it's so big.
Could be. I mean, I think it's a very good question, that, because it opens up this whole wider subject of liquidity in private markets. And what we've seen are valuations and liquidity are greater in the private markets than they are in public markets. And if you're a founder, it can be quite attractive to be able to control your share register, your share price, these sort of things. But also there are advantages of going public. So, that may well happen. I mean, I think that
But no plans.
No immediate plans to do it. But, I mean, I think the company will always be ready to do it if markets are attractive. But I'm a bit worried about markets. They look a bit high to me. And, historically, if America's been on this sort of level of PE ratios, it's sort of flatlined for the next 10 years. So I think there's a wall of IPOs waiting. I mean, private equity have got no liquidity at the moment. So they've got to get some liquidity into the system. Whereas, oddly enough, this last round we did, I mean, it's all in the press, of course. It was the Bailey Giffords, the Fidelities, those sort of, the sovereign wealth funds came in. And it was oversubscribed. We did, as I say, $4 billion, but there were more buyers than sellers. So it shows that there is liquidity in private markets. So there's no hurry. There is liquidity for the Revoluts of this world, I should say. Whether it's across the whole market is another thing, but certainly for Revolut, it's there.
So perhaps can we go back and right back? So 1983, you effectively kick off what Aberdeen Asset Management, which is today Aberdeen Group.
Yeah,
I think you were in your 20s. Is that right?
Yeah, I suppose so. Yeah, I can't remember that far back. Yeah, I think it was 27.
And were you there to build a large fund management business, or was it just scrapping around at that stage?
Yeah, scrapping around is a good description of it, actually. A bit like Ian saying he's a serial entrepreneur. I always had a bit of entrepreneurial sort of spirit about me. I bought pubs and all sorts of, learned all the sort of lessons in a very high interest environment. When you think back, interest rates were really high, so it was quite difficult. But I learned a lot of valuable lessons. But I hadn't realized, I didn't realize asset management would develop from what was going to be this small cottage industry into this global business. I mean, at those times, the investment bankers were far more powerful than the fund managers, and the fund managers tended to be at the back of the building with the least successful investment banker put in charge of running it. So they were very small businesses.
When I look back at what you did, in some respects, it's similar to what the telecoms industry did.
Yeah.
I mean, I spotted very early that I could double the number of customers and I didn't need twice as many people. Yeah. And is that fundamentally what you did with fund management?
Yeah. Well, fund manager can manage a sort of infinite and not infinite, but a huge amount. So scale is very important, and organic growth is very important. Now, we coupled organic growth with acquisitions because we did about 60 acquisitions, but I worked out
60.
It's more than him.
It's more than me.
I worked out we couldn't grow. Bear in mind, we were situated in a small oil town in Scotland. a wealthy oil town, but
For how long? How long before you came south?
10 years probably
Oh,
till
right.
we
Well,
came
quite a long
south.
time.
Actually, maybe sooner, about 5 years till we made our first acquisition. We bypassed Edinburgh and went directly to London because I worked out there were more inefficient businesses in London. The scale was far greater there. And we looked for businesses that were pretty poorly run. And what we did was exactly as you said. We amalgamated funds, merged funds, kept the good fund managers, and really took out as much overhead as we could and moved the operations to
That
Scotland.
must, from memory, you started with about 70 million under management and you had several billion, sorry, at the end.
Yeah.
I mean, it must get harder and harder to find an acquisition that's even worth doing when you get that big.
Not really. I always preferred doing small. I would do a big acquisition, or we would do a big acquisition every few years, but during those we did a lot of infill acquisitions. I much preferred infill acquisitions, as you probably did in the telecoms business. It's culturally much easier to do a small acquisition and integrate it rather than a merger.
You can also buy them cheaper and the upside's bigger.
Yeah, I mean, we would be buying on low single PEs once you stripped out the cost. I mean, it was it's a great business, merging asset managers, as long as you're good at it. And I stress that there weren't that many people were good at it. We watched a lot of people screw it up as well because they didn't know how to do it. But we knew we had a sort of playbook. We knew exactly.
You're also very
how to do
big
it.
on hiring young people with
Yeah.
interns and graduates. I know you said that Revolut are now starting to do that, but you seem to be very heavy on that very early on.
Yeah, no, I'm a great believer. I think there is a myth. There is a graduate scheme. It's actually internship schemes, actually, I think. And if you're listening to this and looking to get started in the business, don't try and get an internship, 2 or 3 years before you graduate, because if you're any good, they'll take you on. We very rarely took on any graduates that had not been in the internship scheme. So we used to take on 70, 80 interns a year and then about 20 to 30 graduates every year. And then we also promoted from within. That was part of the strategy, is always give the grads the first, someone who'd been with
Let's
us.
try and do some advice for graduates then, because there's a lot of them, more than there are jobs. What were you looking for?
Depends. We looked for a mixture of some geeks, as people with engineering STEM degrees from good universities with really good degrees. So some of those, and then we looked for people who were more balanced, shall we say. We liked sportsmen as well, because sportsmen, a bit like people with good degrees from good universities, have to be highly organized because they have to manage the sport as well as their academic
They can get up in the
careers.
morning as well, too.
Yeah, they can get
Yeah.
up and train at 7 o'clock. Anyone who can get up and train 7 days a week, they tend to be highly disciplined, as I say. So yeah, it was, but it was great, and that allows you to build a culture from the bottom rather than the top.
But did people
as well.
stay with you a long time?
Yeah, they all stayed. Very rarely did anyone leave. We had very, very low turnover, even of fund managers. I could count on one hand during my period there and the number of fund managers that left and were successful.
Yeah, okay, but this is 35 years.
Yeah.
So Aberdeen was kind of known as being a bit of a disruptor in
Yeah.
the marketplace, right? And then, of course, the big merger you did, you mentioned you sort of bypassed Edinburgh, which was seen as
Yeah.
being a bit more of the stuffy kind of financial services capital of Scotland. And of course, you merged with Standard Life 2017, 2018. And the two organisations culturally had to come together. And I think you were joint chief executive with the other guy at Standard Life. I mean,
Yeah.
what was the thinking behind that? And I guess, what was that like?
It worked pretty well because I got on very well with him, and we were different personalities. So I was probably more entrepreneurial. He was more thoughtful. He was probably cleverer, than me. So it worked really well. But of course, markets don't like joint CEOs, and I don't know why, because I actually think it's not a bad idea. And banks tend to have joint CEOs across all their business lines. So yeah, it worked pretty well. But the chairman of Standard Life was very keen on this deal because he wanted to bring in a global entrepreneurial business with what was largely UK with some international exposure, largely and doing very well on third party money, but also had a huge block of internal funds to manage, whereas we were 100% third party. So we were 350 billion of all third party money. And we were good in certain areas, emerging markets, these sort of things. Standard Life tended to be very good in UK equities and bonds and cash and these sort of things. So theoretically, it was a good merger. Whether it worked, I don't know. I think we should have done better than we have done. And
In what way?
things like the integration weren't handled as well as I think they could have been. And then once the chairman left, whose vision this had been, I took the decision. I thought, I think I might just make the new chairman's job easier by saying, I'm happy to go.
I mean, you're a big personality, Martin, right, in the industry.
Yeah.
You know, at that time, I mean, everyone knew Martin Gilbert, right?
Yeah.
And did you sort of feel in a way it needed a different sort of nuance or a different emphasis, or it was time for you to do
I think
something
I'd
else?
done 36 years, you see, as CEO, so 35, 36 years. So I'd had enough, actually. And I'd maybe stayed too long. I don't know if I should have gone earlier at Aberdeen. And I think age does make you more conservative and maybe less energy or whatever, or maybe you lose that real hunger you had. And I watched Nikolai, he's still got that real hunger and real drive to grow the business. And maybe I'd lost that a bit. So I thought to myself, and once the chairman went, I thought, I'm going to go as well.
But one of the bits that fascinates me about you, though, is the mantra on the stock exchange has always been, you should change your chief exec 9 years maximum. They've got to move on. You were there 35, 36 years. Your team had been there with you forever, and you built a business that was worth 4 billion. So there's a balance there somewhere.
Yeah,
I think.
there is. I mean, I don't agree with the 9-year rule for directors, even
clearly.
non-executive directors. I think if you've got good directors, you should keep them. I just don't agree with that. But you got to remember, the market doesn't really like founder-led businesses for some reason. They much prefer more professionally managed.
Why do you think that is?
I don't know. I mean, the American shareholders love founder-led share, paid a lot of money. Here, we like professional management paid not so much money. And if you get someone, whoever it is at the drug company, Pascal, I can't remember his name, being paid American-style money, there's all sorts of issues. And on Glencore, where I'm chairman of the remuneration committee, the CEO, he gets a bonus, say, of 5 times the salary, and he cannot sell a share until 2 years after he retires. And the Americans are thinking, this is fantastic. This is incredible. No other CEO is as aligned to the long term as this CEO. Australians the same, South Africans. The UK, though, I mean, what's the catch? So it's interesting. There is still quite a conservative lobby here amongst institutional shareholders.
And if you look back at your career, are there one or two things that you sort of think back on and think, that was a real huge achievement? I mean, obviously building Aberdeen.
Yeah, getting out of split caps was a real achievement. Probably, and then after, it was fascinating. We came out and Christmas Eve 2004, and we bought Deutsche Bank in July 2005. And that was the kind of thing that changed Aberdeen beyond any recognition. And that tripled us in size.
From memory,
And
you were the smaller party.
yeah, we were half the size.
So how did somebody half the size buy somebody twice as big?
I don't know. It was interesting. In January, they put it up for sale. They screwed it up in about January 2005. And the CEO announced that if we don't turn around Deutsche UK, this is the old Morgan Grenfell Asset Management, by the way, one of the big four. And I also remember the lady from the Financial Times that had hounded me for years. When she saw the list of 21 companies bidding, she said Aberdeen will win. And I remember we kept going and going and going. We got down to the last two against BNP Paribas, and I said, "Look, we've no money. You know, you're going to win to BNP Paribas. If you do win, look, we'll take the equities." But what they didn't realize was I'd got JP Morgan to underwrite the bid, and it was an all equity, deeply discounted rights issue, all equity. It was a phenomenal deal, it turned out to be. But I also remember I learned another valuable lesson there. They get it in the public domain. You know, get a deal signed. Always get the deal signed because you don't know what's going to go wrong. I remember at 6:30 that morning, Bill Rattray, our CFO, called me and said, "Martin, the lawyers want another day." I said, "No, sign and announce at 7. I don't care what. Just leave all the loose ends." So we announced at 7. Our share price rocketed. And then the bombs went off on the 7th of July, 2005 in London. Every share was down, 25%. And ours was I've got a screenshot. Ours was the only share up that day. But I learned if we hadn't got it announced that morning, the deal would never have happened because the underwriters would have pulled out. So you just got to get it done if you're going to get it done.
And any big, but any things you sort of regret looking back on it?
No, I mean, you learn your lessons. And, as Ian knows, being a CEO in the tough times is far more difficult than being a CEO in the good times. You can be, you can ride the crest of a wave in the good times. The true test of a CEO is how they deal with problems, whatever it might be. So, yeah, you obviously would wish some of the bad times don't happen, but they do happen, and you've got to just deal with it as you can. And you learn lessons about yourself during tough times as you do with the good times. And I always think you're never as bad as people say you are, and you're never as good as people say you are. So you got to be careful you don't believe the publicity as well and become arrogant and just take too much risk because you think you can outgun the market or whatever it is. So
Staying humble.
stay humble. Yeah,
I love the bit that I met this guy like 30 odd years ago, and he was watching rugby. Today, he's still watching rugby. Yeah, there's a big lesson
I'm not
there.
looking forward to watching Scotland on Saturday, though.
Martin, it's been an absolute pleasure.
Thank you.
Thanks very much. Ian, Martin Gilbert is an extraordinary character because he was an entrepreneur. He created this enormous fund management business. But 6 or 7 years ago, when he started chairing Revolut, and of course, Nick Soronsky, who's this incredible global intellectual powerhouse of a CEO, but Revolut wasn't that big. And to sort of shepherd the business through to where it is today with a valuation that could be $100 billion or more, or pounds, is just extraordinary. And a very interesting interview and quite candid and honest around how you sort of help that individual and help the company as it scales.
I doubt we'll ever hear anybody talk about growth at that kind of speed. I mean, when you said we had 1 million customers every 16 or 17 days, I mean, that's just almost beyond comprehension. But it did remind me in some ways of a very, very first interview with Skyscanner, where we asked them, how did you go so quickly? And he said, we went global very rapidly. And that was the big difference here compared to the other digital banks, wasn't it? Right. And you can only do that with software. But I also think that he spotted a global problem. His success in Ireland. Ireland is the euro. Loads of Irish people live in the UK.
And 80% of adults in Ireland
Astonishing.
have Revolut. It's almost hard to believe that.
it applies to Mexicans in the US, to Pakistanis in Dubai. There's loads and loads of places around the world where migrant workers want to transfer money, and they seem to have just cornered that market. When he said it's become a verb in Ireland, to split a bill is now called shall we revolute. That's incredible, isn't it? It was also interesting to listen to how he works with Nick Skronsky, because he seems to break all the rules, doesn't he, Nick?
Yeah, he does. And clearly, when you have a founder who is iconic, running a business that gets to that scale, I mean, you're talking with Nick Skronsky, you're talking about someone of the caliber of Mark Zuckerberg or Elon Musk. I mean, he's in that league, right? And he doesn't want to sell. You know, one of the comments he made about Skyscanner, which I thought was very interesting from Series 1, was he thought they sold too early. That was Martin's comment. So how do you work with that individual to add value? And the answer, I think, is it doesn't fit into a box. It's not about standard corporate governance. You have to find a way of working that works for Nick, that works for Martin, that works for the board, which he seems to have done. But it's a quirky way of working, isn't it? At the end of the day, you're not spending 2 hours on the phone every week. It's probably 15 minutes to half an hour.
Well, that whole idea that Nick has about 40 direct reports, and he tends to do 15-minute meetings with them all, but he'll do one day on, say, product and one day on something else, and that's how he concentrates. And I got the impression from Martin that Martin's job almost is to protect him and let him get on with it, and I'll do everything else that could get in your way.
Absolutely.
So talking to investors, raising money, don't bother the guy. But it was also interesting to see that Nick actually uses his own product every single day, so he crawls all over it, so he's never happy with it. It's another example of perpetual, constant product innovation, isn't it?
I think that is the one common theme across the series. It's about product innovation, and it sounds so obvious, but founders and CEOs who really, really care and understand about the product.
I mean, this is absolutely one of the UK's greatest success stories ever.